Strong GDP support for interest rate increase in 4Q180 maintains a non-consensus view. Expect interest rate increase in 4Q180. The strong Thai economy in the second quarter is supporting the view. Non-consensus are forecasts there is a chance to raise policy rates in 4Q180 to 1.75% from the current 1.50%, to adjust monetary policy to normal. In the recent two meetings of the MPC, there has been less discussion on the need for a more relaxed monetary policy in the near term. Dr. Wittaya Santiprabop, the governor of the Bank of Thailand, has expressed his opinion after the GDP announced that interest rates rise. It does not mean that monetary policy will not relax. It is not a special relaxation. Infoquest, which corresponds to last month, that Dr. Donnakhorn, Senior Director Macroeconomic Department Have, commented. If second quarter GDP grows from 4.5% should help boost interest rates. By these interviews, support our perspective on that. The interest rate is too low for a long time to come to an end. GDP growth of 4.6% in 2Q18. GDP grew by 4.6% YoY after a 1Q18 GDP growth of 4.9%, revised figure, resulting in 1H09 GDP grew by 4.8%. Q2 GDP figures matched our forecast, but higher than economists in Bloomberg forecasted at 4.4% for seasonally adjusted QoQ numbers. The economy remains positive. Sentiment increased by 1.0%. Production high growth. The tourism sector has a high growth rate, and that continues to grow. Hotels and restaurants 9.4% versus 12.8% in 1Q18, and transport and communication 7.0% from 7.5%. The growth slowed down from the first quarter. Tourist arrivals slowed down from the previous quarter, 9.1% versus 15.4%, while growth of 10.4% in agriculture, 10.4% versus 6.5%. Supporting activities in retail and wholesale, 7.2% from 7.0%, while financial intermediation activities improved from in the previous quarter, 5.5% from 3.6%. Interest income increased with the expansion of credit, although fee income decreased. Construction growth was higher, 2.0% from 1.2%, supported by both private and public sectors. Spending, private demand is improving. Exports of goods and services remained good. Strong demand from the outside. The number of foreign tourists decreased, in combination with high base, resulting in a slowdown in service revenue to 3.1% from 9.5% in 1Q18. For domestic spending, private consumption increased to 4.5% from 3.7%, especially spending on communications, household appliances, transportation and restaurants 9.4%, 7.4%, 7.3% and 7.3%, respectively. Farm income and better employment, a positive factor, bolster purchasing power. Total investment rose 3.6%, slightly increased from 3.4% in 1Q18, supported by both private and public investment, 3.2% and 4.9%, respectively, mainly due to the spending on machinery and equipment. Better fundamentals, but the risk is still negative. We maintain our 2018 GDP forecast at 4.6%, NESDB forecasts at 4.2 to 4.7% based on 1H18 performance. This reflects the accelerated economic activity spreading from external demand to domestic demand. But the pressure from low risk has increased, such as the war between the US and China, economic problems in Turkey, flooding in the country, and the boat crashed in Phuket. We are watching for that factor to have a negative impact on the forecast. By now, the US $50 billion import tax on US goods, and China, on the other hand, is likely to have a negative impact on Thailand's GDP at around 0.02%, according to the NESDB. as we believe that the spillover effect from the Turkish crisis to Thailand is likely to be limited, because Thailand relies on demand from Turkey in a small proportion. Reflecting on the proportion of exports to Turkey, it is only 0.5% of total Thai exports in 2017, while tourists from Turkey accounted for only 0.2%. Foreign tourists who come to Thailand for two reasons. Although the crashing Phuket will cause Chinese tourists in July to drop about 1% from the same period last year, but still growing by 3%, but the situation is likely to be short-lived, as has happened in the past. For floods, the problem looks more tense in western and southern, from the height of the dam to the level of concern, and it is higher than it was in the 2011 Great Flood. Northern and central areas were severely affected. This has severely affected the private sector, especially the manufacturing sector. As a result, GDP declined sharply in 4Q11, shrinking by 4.0%.